Eric, good to have you with us. First of all, define what is the congressional effect that you discovered first as a lark and then it turned into something serious, into a full-blown book available on Amazon.
Well, the congressional effect is the impact that Congress has on the stock market, and it's usually, but not always, harmful. What happens when they're in session is that you have 535 members of Congress, each of whom is an issues entrepreneur, trying to come up with something new to get attention. And if they propose...
Is this issues entrepreneur a polite way of saying press hog?
Yeah, it probably is. So it's you know, and each one of them has an idea. We need to regulate healthcare more. We need to whatever the latest problem is, we need to do something about it. And whenever they try to do something about it, they change the rules for an industry. So if they change the rules for the banking industry or the healthcare industry or the coal industry or the student loan industry, each one of these industries, the moment it becomes aware that there might be a change, buyers have to think about, well, how does that affect the value of this stock? And it turns out that, you know, people sometimes don't get to choose the day they have to sell a stock. Their daughter's getting married, they're getting divorced, they need to buy a house. Whatever day it's due, they have to sell. But if they get money, so if they got a bonus, they won the lottery, when they get the money, they or their advisors might say to them, you know, we really don't understand what's going on under Dodd-Frank yet. Hold off on buying the banks. So it turns out that the congressional effect is, and it goes back well over 100 years. On my work, it goes back to 1965, day by day, representing 12,000 trading days. On the 7,900 days that Congress was in session, the market went up less than 1% annually. And on the 4,100 days they were on vacation, it went up 16% annually. So that's the congressional effect on a daily basis.
Have you ever been able to figure out what specific things Congress does? I mean, a couple of days ago, Congress was in session doing their mischief, and a couple of days the market went up. Day to day, you can't do it. Is it just a long-term thing, or what?
It's a long-term thing. So I've done it over the last, you know, as I point out in the book, I've done it as an approach over the last nearly 6 years. I'm about a little over, I'm pretty close to the S&P, net of fees, net of trading, net of all the stuff that you do on a cumulative basis, and I have half the risk. So this is just it's a discipline that I've grown into. You know, it has a core problem when I talk to financial advisors because they say it's just too easy. How am I going to tell my clients I'm doing something that's so simple? But I try to only invest on days that Congress is on vacation.
Mark Twain said, "No man's life, liberty, or property is safe while Congress is in session has validity."
Yeah, almost everything he said about this Congress has validity. He also said that it could probably be proven by facts, statistics, and otherwise that there is no distinctly native criminal American class except for Congress.
So when you do this, just the mechanics, do you buy an S&P index?
I buy index-related securities, and to achieve neutrality when they're in session, like days like today, I will be short futures, S&P futures that offset the index securities that I own. So that's how I get to be neutral on days that they're in session. And when they're on vacation, I'm just long those index securities.
So you don't sell the securities when they're in session?
I get a little bit of a dividend pickup from doing that. I may, start to try to do a little bit more with yield securities and capture the price differentials with futures. But mechanically, I have a very, very simple fund.
Now, what about days that I guess we'll get more of with this president, where Congress says they're in session and he says they're not, and he makes recess appointments?
Well,
how did you call those?
There are always new cases. I think that I try to look at days that if Congress has announced that they have a pro forma session, which is the president said, well, you had a pro forma session, you weren't really meeting, and so therefore I'm going to go ahead and make my appointments. The issue with that is that it violates precedent, and every time you expand the rules for what government can do and not do and how much you're going to change precedent, the market has to start to factor in, gee, there are more ways things could change. And it applies in other areas as well. On the filibuster side, it applies as well.
Explain that for a moment. Harry Reid, who runs the Senate, says they may change the filibuster rules when they meet. That's going to mean more mischief, right?
It means more mischief. And, in the book,
Means you can't block bad stuff.
You can't block bad stuff. Our founders tried to create a government with lots of brakes on the size of government. And every time you take away one brake, you never know when the car's going to get in trouble. I went back and looked at going back to the Roosevelt administration. I looked at the 80 years that Congress, the 80 years where Congress, some of those years Congress had a filibuster-proof majority, which was a unified government, and most of those years, they had a non-filibuster-proof majority or split government. And so it's not exactly apples to apples with what Harry Reid is proposing, but during the 15 years where there was a filibuster-proof majority, the stock market went up in price annually about 1.9% annually, and on the 65 years when there was a filibuster possibility, the market went up 7% in price annually. So there's an enormous difference in market returns when there's an available filibuster. And I think that there's a sense that the minority is not going to be beaten up as much.
Your research studies go back to 1897?
They do, day by day. In a dollar, so that represents roughly 32,000 daily observations, and it ignores dividends, and dividends, particularly in the early part of the 1900s, were a big part of return. But a dollar invested in 1897, ignoring dividends, ignoring transaction fees, and reinvested just on days that they were in session and held through the end of 2011, that dollar would have turned from $1 into $2. That's not two real dollars, that's two nominal dollars. The same dollar reinvested, just looking at the price action on it, on vacation days, would have turned from $1 into over $300.
S&P versus Dow, do you get different results? People point out from the mid-'60s to the early '80s, S&P was flat, the Dow took a dive.
You don't get anything statistic. To my mind, they're statistically identical. Big round numbers, Congress is on vacation about a third of the time. That 16% annualized times a third is about 5 or 6%. Going back to 1965 in the S&P. The studies that went back to 1897, there was no S&P in 1897, so they used the Dow. On the numbers of the Dow, it's a 5.1%. Of the price gain is vacation price gain. So statistically, those numbers are identical, and it's overwhelming. And it also, applies with all different configurations of government. Republicans controlling both houses and the presidency, Democrats controlling both houses and the presidency, different combinations.
When did the fund actually start?
We started as a public, I started managing money this way at the end of '06, and we started as a public mutual fund in the May of '08, which was a difficult time to launch a fund.
To say the least. On dividends, why do you leave those out? People point out that a huge chunk of return over time is dividends, and does that mitigate what you're?
It does. I mean, people have to, for better or for worse, we all have to plan our lives when we set out to do something. When I set out to do this, you're old enough to remember the days when Fed funds could earn interest. And
what is interest?
Interest is interest on the cash that you have available, and hopefully someday again we'll have a chance to earn interest. So, I'm trying to invest on something on an approach that I think has had a good trade-off between risk and reward over the last 100 years. In the short term, I'm not picking up any interest income. I may look at ways to try to reach for a little bit more interest income. But when I go back and look at this over history and assume that I was able to earn Fed funds on a portion of my cash balances, not even my whole cash balance, the returns have historically been comparable to the S&P, and I'm not, my place in a portfolio for the fund is not a place where somebody's trying to shoot the lights at them. I'm trying to achieve a lot of boredom.
Have you done a comparison of dividends? I mean, Congress has no awareness of what ex-dividend dates are, but as a money manager, you have to be.
Because I own the broad S&P, it doesn't affect me as much. I get a daily accretion of dividends in the index securities I'm buying, and Congress really does have no idea what dividends are, as far as I can tell.
And how do you mitigate against expenses, especially when you have a startup fund?
I've capped the expense ratio for my investors so that they, they're paying a fee that I think is a fair fee.
In terms of performance, some of your critics, big spenders, like to point out that in over time you're a little less than the S&P. And you might respond, the cycle isn't complete yet?
I don't think the cycle's complete, and there's some years where I've lagged the S&P, some years where I've outperformed the S&P. In '08, when I started the fund, the market was down 34% in the period that the fund was public, and the Congressional Effect Fund was down 2% in '08, and that was being invested a lot of the time. So for people that are concerned about losing money, at least it's been battle tested in a very adverse environment where there's been a lot of uncertainty created, and I'm very proud of the fund's performance in those extreme times, and I doubt I'm going to, if there's a raging bull market, I won't keep up, and there won't be as much use for it, but there'll be some use for it because everybody has to have some money that they can go to sleep about.
And in your mind, what is a full market cycle?
It's probably 5 to 8 years. I mean, we're still, certainly as a country, we had a big change of direction in 2008, and we're going to wind up. I don't think we've seen the end of the impact of the policies that the voters voted for in 2008. Although I would say that, given that they returned pretty much the status quo to power, I would characterize the voters as a little bit like an abused spouse who just says to the politicians, "Give me more of that."
Some of your critics point to when you talk about Congress dealing with health care, that obviously breeds uncertainty. They say, well, look at Massachusetts. They have Romney Care, which is a precursor to Obamacare, and they're doing better than the nation is in terms of unemployment.
I guess I just, on so many levels, the Congress has, in the book, one of the book talks about how each congressman is incented to change the rules and attract attention so that they could get reelected. That's what they think their real job is, to get reelected. And to the extent that they interfere with natural markets and disturb the price signals we get from the markets, I think that they do an incredible amount of damage. And I'm not a fan of people. I don't believe in jobs just for jobs. I believe in jobs where somebody knows that they're adding value, and I don't think it's as important as people think as to the price levels. I think if people know they have a market for their skills, they have courage. A few nights ago, my wife and I watched Alice Doesn't Live Here Anymore, which is a 1973 film about a woman who was going to strike out on her own. Her husband passed away, and she left for Phoenix. She had 2 anxious nights in Phoenix, and then she found a job on the 3rd day. That's what I think the job market needs to be like.
Gold. Why do you like gold?
I like gold for the same reason I don't like the government. Gold doesn't make any speeches. It doesn't have an agenda. It just kind of sits there and lets history talk for itself. I think quantitative easing is when you kind of cut through it all, quantitative easing means that we're going to generally debase our currency over time. The fact that it may have held up a little bit compared to other regions doesn't mean to me that we haven't debased it. It simply means that they may be debasing at a slightly faster rate against their own currencies.
Mm-hmm.
And I think that you have to measure the success of politicians as to, what was the change in the real wealth that somebody had during an election cycle. There's some chapters in the book about nominal returns and
Real returns.
And real returns. And when Reagan was, it's not necessarily related exclusively to party. When Reagan was in office and when President Clinton was in office, if the average American looked at their portfolio, which was a mix of housing and stock portfolios, and then divided it by the change in the price of gold, they all felt that they were much wealthier. And they were. They could take vacations in France, and they could do a lot of things that they can't do now. And so I look at the changes in real wealth or real net worth and use that as a measure of whether we're better off. And I think the consumer feels it as well. If you go to the gas pump and your gas costs you twice what it did 4 years ago, it's a problem if you've had 1.5% wage increase and were lucky enough to keep your job during that time.
Somebody said recently QE, talking about the Fed, also stands for Queen Elizabeth. And therefore, instead of calling it QE, 3, 4, 10, whatever they're on now, call it Titanic.
Well, I mean, I just, it's incomprehensible to me that we can run these $1 trillion deficits and think that our kids are going to be okay. We can definitely run them and think that our legislature can be reelected for a cycle or two, but I just don't think it has a good ending.
Has there been sessions of Congress in your vast research where more good was done than harm?
Many. This is a guideline. It's not an immutable law. In 1997, they lowered capital gains rates. Didn't work then. They also impeached the president, which I thought was good for the stock market but I don't want to say that it's always good. I think when President Nixon was facing impeachment, it was bad for the market.
Tax cuts?
When they lowered taxes in '81, when the Democrats and the Republicans lowered
86.
taxes in '86 and in '78, '86 not, but in '78. So there have been numerous times when there have been major policy shifts, and usually there were policy shifts that could be interpreted as smaller government, and it doesn't work as well then. So people do ask me occasionally, well, what happens if we have a perfect president and a perfect Congress? Won't your approach not work? And I say, absolutely. And if you think that's going to happen soon, then please do not invest.
Democrats versus Republicans. Who's better for the market?
Well, in nominal terms, I think that the Democrats are somewhat better. There's no question the stock market is, for example, there's no question the stock market is up. In nominal terms, in S&P terms, the stock market is up significantly over the past 4 years. There have been academic studies that have described the difference as much as 11% returns versus 2% returns. But it's actually a quite tricky question. I deal with it a little bit in the book. There are many, do you mean a Republican president? Do you mean a Democratic Congress? President Reagan, in 1980, he was running for office. The stock market was up 32%. Do you think it was up 32% because the market was because they were happy that Jimmy Carter was in office? I think the market was up because it knew before we did that Jimmy Carter was going to leave. The recent data, using gold as a deflator, suggests that Republican Congress is good for real wealth. Although if you're talking about the presidency, Clinton dominated the presidency during a lot of the time that those numbers were good as well. So I'm giving you a little bit of a mishmash answer, but I think the Republicans are a little bit better on real wealth accumulation.
But how do we mitigate aside from your fund, the baleful effects of Congress? What should Congress do aside from not me?
Oh, what should Congress do? Well, first of all, I think that 59% of Americans would replace every single member of Congress right now. Those are the polls that are out there. And if you walked into your office for Forbes magazine and you found out that 59% of your readers would replace every writer at Forbes, as a guy running the business, you would have to think hard about what that meant. And what I think it would mean is that you'd say to yourself, I have to go out and get better writers. I think in the case of Congress, we got to go out and get better congressmen. We ought to be increasing the amount of money that a congressman makes. I know it's counterintuitive, but I'd like to pay congressmen several $1 million a year. They're making very important decisions. I want them to get wealthy from their day job. I don't want them to get wealthy from arranging real estate transactions or finding another issue. I want them focused on just the good of the country. And if I could get term limits as part of that bargain, even better. I wouldn't let them meet in Washington. I'd like to see them work remotely. And it's a modern business. Have you ever called into the office from outside of New York and asked them to do something? I'm sure you have once or twice, or maybe even several hundred times or several thousand times. In a modern economy, if they were living with their constituents and voted remotely, the lobbyists would have a much more difficult time corralling them up and log rolling them for doing what they wanted. So those are two ideas. These guys have a bigger impact on our welfare than a shortstop for the Yankees. They ought to be paid big dollars, and we ought to attract the best talent. And people ought to think of it as something that I can do once and do really well, do it for not an unlimited amount of time, but an important amount of time.
Eric, thank you very much.
Thank you.
That was fun.